Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chris Volpe, director at Zephyr. We're here to discuss separately managed accounts known as SMAs, their fund flows, and general wealth management trends. Chris, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me again, Jill. It's been great.
All right, you got it. Let's talk about the top SMA universes. Where are you seeing the inflows?
So it's interesting, for last year and into the beginning of this year, we're actually seeing high net worth flows, so investor direct flows going into fixed income, which, probably not odd in and of itself. But what we're seeing is the mutual fund flows, so coming from asset managers for model portfolios, are going into equities. And so what we're really looking at here is sort of direct investors, the high net worth and institutional investors, are looking for more actively managed portfolios at the fixed income level, whereas they're looking at other places for equities. Both returns have been great. 23 was a great year in return for equities, but with interest rates changing over the next 6 to 8 months, who knows what's going to happen?
Why do you think they're looking specifically for active fixed income ETFs? Is it just because it's a more technical space to trade, or they're looking to model specific bond benchmarks?
Yeah. I think this is really where the tax implications of SMAs come into play, because in SMAs you actually own the assets, you own the underlying assets, and so you get a better tax profile from your fixed income investments if you own the investments directly. And so I think that's why the ultra high net worth, I think they're also trying at this point to lock in the higher interest rates, right? We're seeing in the under sub 1 year maturity, mutual fund flows are actually going up. So high net worth investors are sort of looking to lock in those higher interest rates as interest rates potentially come down over the next 6 to 12 months.
Why do you think SMAs are growing as an option for investors?
Well, I think a couple of reasons. One is there are tax advantages of actually owning the securities versus not, or versus owning the mutual fund itself. I also think that because of technology and because of the way portfolios are administered now with model portfolios, the minimum to invest in SMAs has come down quite a bit over the last 3 or 4 years. And so where you couldn't get into it with less than a $500,000 minimum, you can get in significantly lower now, somewhere around the $100,000 range. So it's much more open for higher net worth investors.
Let's talk about trends in wealth management more holistically. Are you still seeing customization be a key area for investors, what they're demanding from their advisors and managers?
Yeah, especially when you're looking at the high net worth, ultra high net worth, and institutional space, and specifically in family offices where they're catering to multiple different people, right? They're catering to boards, they're catering towards different family members. Each of them have a different need of reporting, right? Some just want to know whether or not mandates are being met, but when you get to higher levels of board reviews and things like that, they need a lot more detailed information. And so being able to give that information quickly, easily, in a repeatable process is really important for everybody at this point.
Chris, it's interesting, in the course of our reporting here on Trade Talks, it's not a conversation, is 60-40 dead, but it's more, let's reallocate our positioning and include some alts. Are you seeing alternative investments grow as a piece of the portfolio for high net worth individuals?
Yeah, especially, like I said, the technology is coming down, right? So where before, even if you think about private investments, right, private equity funds and things like that, you'll see the ability to invest in them through fund of funds and through other things, and real estate as well, with REITs going direct to REITs. You're seeing these become more accessible, and therefore they're becoming more a part of the portfolio. So instead of 60-40, you're 50-30-10, or whatever the numbers come out to be, right? 50-30-20 actually, but whatever they come out to be, looking at making sure that every portfolio has some level of alts in it to defray some risk.
And finally, when you think about the next generation of investors, how do they approach client experience? What are they looking for from their managers?
During the pandemic, everybody was preaching digital. And I think what we're looking at now is we're looking at people who want to consume information in whatever way they want to consume it. Some will be digital, some will stay on paper. As long as it's that customized, here's what I'm looking for, give it to me. I think it's pretty important that that's the way people look at things.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.